Well, all this week, we're going to be taking a look at the health of the real estate market with our special series, Property Players. Today's guest, to kick it off, controls millions of square feet in this town and possibly where you live as well, or at least where you work. From the Empire State Building to buildings near Grand Central Station and Macy's, Tony Malkin invests in office, retail space, and also housing, homes, residential homes. He's carrying on a family business that is 4 generations old. I didn't know that, Tony. I know you've been around, but not that long. Come on.
Well, we've been around.
So, Tony, I think last time you were on, you had just completed this deal with Li & Fung, right?
That's right.
Apparel company in Hong Kong, you know, for ESB, and that was a huge deal for your for that building.
Right.
I mean, have you done any more deals like that?
Yeah, we have. We are continuing to do larger deals. You know, at the Empire State Building in particular, we're generating vacant space as we change it over from smaller tenants to larger tenants.
Okay.
And we still have very significant interest in the 100,000 square feet and up range. There's LFUSA is interested in expanding. Cody has taken additional space since we last spoke to, another 100,000 square feet. And we're very active in that regard. Also outside of that, in the 60 to 50,000 square foot range in other buildings around New York. The larger blocks of space are more valuable.
What about below? What about the smaller blocks? What's going on
Smaller
there?
blocks are it's interesting. Things slowed in the smaller blocks of space, and I'd say they're middling right now. In the 3,500 to 10,000 square foot range, there's action if you have pre-built spaces which are ready for tenants to move into. In that sort of 10,000 to 25,000 square foot range, things are slower. The small size companies are slow.
I was going to say, because they're on hold right now, because of this economy, perhaps, or?
I think there's a lot of uncertainty. They're very concerned about making long-term commitments, and in most cases, they're interested in extending their lease term rather than taking on a new lease.
Ah, I see. You've just raised money for a 6th fund, right?
That's our debt and senior equity fund. Yes.
Okay. Was it difficult raising money?
It was not, actually, and we're about to go out for a second tranche of that for that fundraising. This is putting in mezzanine money. This is the gap between senior equity and debt, or senior equity, which is just below equity, and mezzanine. And there's been real interest in that. We've been able to put the money out as well, which is good.
Okay. And why has there been real interest in that part?
There's been real interest in it, I think, because the capital structures out there are still a little uncertain. CMBS has faltered a bit. There was a big offering out there which didn't get a rating from Standard & Poor's and which sat around. I think there will be new CMBS, might be a little more conservative in the size of the pools.
Okay.
And there are still people out there who are interested. In New York City, the area particularly.
New investors interested?
There are new investors.
Okay.
There are. We just bought the post office on Greenwich Avenue in Greenwich, Connecticut. We also raised money for that, and a lot of interest in that, oversubscribed. People are interested in where they can get more of a yield than they get from CDs or treasuries.
Oh, yeah, because you're getting pretty much nothing.
That's right.
Tony, we had Sam Zell on a few weeks ago. Sam says there is practically nothing really that he wants to buy here in the U.S. except for distressed debt.
Well, Sam is very good at representing where he wants to go by telling people that he's not going there. So, you know, Sam just bought a building in Chicago.
So you don't believe him.
Well, you know, Sam's a great guy, and Sam's very, very smart. Clearly, I think he's done more outside the United States than in the United States more recently. But I think, you know, Sam is an omnivorous opportunivore, and wherever opportunity is, he'll strike.
Well, are you interested in that part of the market? Do you dabble in that part of the market?
We prefer at this point to originate our debt. We don't really buy debt at this juncture. We might change that in the future. We've looked from time to time. We're a little more, I should say, stuck in the mud, old-fashioned. So for us, issuing mezzanine loans and senior equity is a big move forward.
You, I know, are not a stick in the mud, Tony. Okay, really quickly, because I know you've been in Washington quite a bit over the last several months, talking to them about making buildings more energy efficient. That's what you did. You totally refurbished the Empire State Building. You just had some briefings with various Senate committees, right?
That's right.
What's been the reaction so far to this push that you've been hammering for the last year and a half, or several years, really?
Well, I really think that as the data are coming in, there's a lot of positive receptivity to the fact that quantitative judgments on energy efficiency retrofits are much better than the qualitative efforts of doing the right thing. So when we can show investment in, return out, when we show that compared to solar or wind, these are American jobs being created, as opposed to exporting dollars overseas to import solar panels and wind turbines. These are typically American jobs with benefits.
But you tell, like, what's the number on jobs? Have you been able to calculate that?
We did a report, actually, which we submitted to the Senate and the House. It was put together by the Real Estate Roundtable, the Natural Resources Defense Council, and the U.S. Green Building Council. We're pushing a change in Reg 179D right now, which would make a tax deduction more accessible and utilizable, which we think would create 75,000 jobs immediately, 155,000 in a very short period of time.
There you go. That was the number. All right. Thank you, Tony. Great for you to stop by.
Pleasure.
Appreciate it, Tony Malkin of Malkin Properties.